This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, March 30th, 2016. Euro dollar. So the euro has been well bid in recent trade, with the market now tracking closer to the 2016 high at 113.77. At this point, can't rule out the possibility of a retest and break of this level, which will expose more medium-term resistance at 114.95 further up. However, if any rallies stall out and open a break back down below recent support at 1144, this could open the door and expose a retest of 110.58 further down. So right now, despite the gains, which could warn of a 2016 high retest, the market still remains choppy overall, and we're going to need to focus on a break of 1377 or a break back below recent support, which comes in at 1144, to confirm directional insight. Sterling dollar. So cable has broken up in the past several sessions, with the market stalling out just shy of 140.53 in recent trade and trading back up above 144. But again, overall, the downside pressure remains intact here, and while the market holds below 146.68, any rally should continue to be very well capped in favor of additional weakness, eventually back below 140.53 and towards that retest of the 7-year low at 38.36 further down. Dollar yen. So dollar yen continues to consolidate over the past several weeks, with the market locked within a bearish consolidation that could be poised for fresh downside on a break below recent multi-month lows at 110.67. Ultimately, only a break back above 115 would really take the pressure off the downside. Euro Swiss. So Euro Swiss continues to be very well supported on dips down into the 108s, and a fresh medium-term higher low is sought out ahead of the next major upside extension beyond 112 and towards 115 further up. At this point, only back below 107.15 would compromise the bullish outlook for Euro Swiss. Aussie dollar. So Aussie has rallied back towards the recent 2016 high at 76.81, with a break above to then expose next medium-term resistance at 78.49 further up. At this point, if the market can't establish above 76.81, then we could see a more meaningful bearish resumption, but a break back below that previous resistance now turns support at 73.85 would be required to ultimately put the pressure back on the downside. Dollar CAD. So dollar CAD has seen a nice little bounce out from recent 2016 lows at 129.23, but inability to establish back above 134.06 does keep the pressure on the downside for now, potentially exposing a break to fresh 2016 lows and to a retest of the October base at 128.32. Again, we would need to see a break back above 134.06 to take the immediate pressure off the downside. Kiwi dollar. So Kiwi has rallied back up towards some critical medium-term resistance in the 69 area, but at this point, while the market holds below 69 on a medium-term basis, or on a short-term basis, even on a daily close basis, the overall pressure remains on the downside, and there is risk for a resumption of declines back down towards next key support at 65.46, which guards against the 2016 low at 63.47 further down. So again, while the market holds below 69 on a daily close basis, which is medium-term resistance, the market should continue to favor the downside and a topside failure. SPX 500. So the S&P 500 continues to trade with a bid tone over the past several days, though at this point rallying up above 2050 does suggest that the market could eventually stall out in the sessions ahead in favor of the next meaningful lower top and bearish resumption. At this point, only a weekly close back above 2050 would really compromise this outlook and put the pressure back on the top side. Otherwise, look for a more imminent bearish reversal with a break and close back below recent support around 2021, 2022 to confirm or strengthen this outlook and accelerate declines. Gold. So gold continues to be very well supported on dips following that recent breakout beyond that previous resistance point around 1190, and the market is now focused on a bullish consolidation ahead of what should be the next major upside extension through the 2015 peak from January of 2015 at 1307 further up. At this point, only a close back below 1190 would compromise the constructive outlook for gold.